Hello everyone, this is Ming Zhong. Welcome to today's market analysis for the S&P 500 E-mini futures. In this video, I am going to show you a market recap on the last session plus trade reviews in an M3 that I will cover the entry, exit, and the rationale behind. The setup was based on a spring action during the London session and also a reversal setup during the US session on the last Friday. And going forward, I'm definitely will cover the bias and the key levels to pay attention to, and also the potential setup for the session later. So let's just get started now. As you can see on this daily chart of the S&P 500, last Friday I talked about potential bearish scenario because I compared this Thursday action with the 19th of May, and I just thought about there was some demand there, but that need to have some kind of the upside confirmation, which it didn't, because during the London session it actually fell and fall through the support, but end up become a spring action here, and eventually it just resolved itself out of this spring action and closed at a quite a nice bullish level. So let me just get to H1 so you can have a better view. Okay, let me get back here. Okay, so I talk about we are somewhere around there. At that time I think it's kind of like falling and also testing the level, and eventually it has this kind of the spring action, which I actually did initiate a long entry just after the reversal near the support level of the swing low here based on the spring setup. And because we have this kind of the effort versus results where it actually shows demand, but what I want to see is the confirmation to go to the upside and quickly rally from this danger zone. But as you can see, during the London session, it actually just fall through, and luckily it just have some kind of the support from this swing low and eventually recover. And during the US session, I talk about still maintain my bearish view. So I actually initiated a short position around the supply zone here based on this breakdown bar and also the resistance level there. But as we can see on this H1 chart, there wasn't any kind of the downside follow through. So I will just dive into M3 and you can clearly see what I mean here. Let me drag it back to last Friday during the London session. So the first trade review I am going to talk about is this during the London session. Okay, I didn't actually mark that, or maybe I deleted that, but anyway, I think this is the session. Yep. So this swing low at around 2908 is what I have marked previously. As you can see, as I zoom out here, the swing low at the 20th of May, and it kind of like provided a support level. So during the London session on a last Friday, we have seen that it has a sharp sell-off and it fit nicely into this downtrend bar, and just right after it broke out from this downtrend, it kind of like dipped below this swing low support level and quickly just come back here. So this is one of my favorite setup, which I call it a spring, or somebody call it false breakdown. So the entry that I initiated was just very simple. It's just when the price closed above the level. So this is the level I pay attention to, 2908, which was the swing low based on a prior swing low there. And also just you can see that this dip there was very short-lived, and you can see it's only just only 2 bars below, and I just enter right after the close of the third bar here at 15:21 my time. So it just didn't go straight up because it actually had a reaction and come back down and have a test of the spring, which is perfect because you can see that the volume actually decreased of this reaction there, and also we form a higher low here, so which is a very nice test for this spring action. So if I didn't enter it just right after the spring, I can also enter it here just after the close of this bar here, or you can just extend it to that bar as well. So because this reaction actually acted as a test of this spring action, and that long entry or the long trade actually took me quite a while to exit because my target was actually for the S&P 500 to come back to the resistance zone around 2940, which is coincides with this breakdown bar here and also the resistance level there. So just right after this bar here, I just immediately exited my position for the long trade, enter right after the spring action. So I would say that was a very nice trade. The reward to risk ratio are pretty good as well, because if I drag it to somewhere around there, and yeah, it's definitely more than 3. This one is, yeah, I just put a stop a few points below the low here. So as you can see that the reward to risk ratio is definitely more than 3, so I consider it's a very nice trade, and it's just during the London session, and it took probably 4 or 5 hours to close the trade, about 7:30 or close to 8 o'clock here, from 3 to 8. Yeah, it's about 5 hours holding time. And just right into the US session, my view was actually still bearish because of the non-upside confirmation. Based on the effort versus result, I saw the demand was present on Thursday, but on a Friday we have seen a sell-off during the London session. So what I actually anticipated was a test of the breakdown bar around 2940 area, and I actually enter a short. But as you can see here, this is the opening 9:30, and we have a sell-off, but it didn't really go anywhere. And just right after the test, so you can see that this is the first breakdown out of this localized area, and subsequently we come to have a test of the support and resistance area. And just right after the reversal bar, I enter a short there, which I mark it in the orange circle or the golden circle, and I put my stop just a few points above the high here. But you can see that the first leg down actually just create a slightly lower low, but look at the rebound. The rebound actually penetrate through the high here, although it did get rejected and have a second leg down, but the second leg actually forms a higher low here. And just when I zoom in here, you can see that this bar here is actually quite sorry, if I compare this bar 2254 to this bar here 2257, I can see that demand was in on this bar on a 2257, because you can see that the spread actually is smaller than the spread on this bar, but the volume is slightly higher, and we see that there is a demand tail here. So demand was definitely in, and at that point I just anticipated there will be a reversal bar to come up, which it did just right after this bar here, and I just close it right at this candle or the bar here. So pretty much is not a very significant or the great reward to risk ratio, because if I hover here, you can see that it's just about 0.5. It's less than 1, but still, if it didn't turn up to become a loss, to me I think is quite a nice trade. And because this is what I call is the right judgment to actually exit a trade, and if I didn't, eventually it will become a losing trade. Around 12:30 here, it actually touched the stop loss that I set. So these were the two trades I initiated, one at the London session and one at the US session. So I'll consider quite a good trade for me. And anyway, because this is one of the important concepts that I would like to talk about, that's regarding the spring action. Because prior to this spring action, my view was that this trading range is actually absorption area. So as long as it can still maintain within this range and the absorption theory is still valid, and out of this, I think we are getting to see higher targets, which it did, as you can see on today's action. Because the effort versus results and turn up that we did not have any upside confirmation during the London session was actually resolved by this spring action, and subsequently we see that we have a sign of strength rally, as you can see here, and a horizontal reaction, which is a bullish sign as well. And yesterday was a public holiday, the Memorial Day, and I did not do anything, just watch the market. And you can see that the volume is very low, but despite having the low volume day, we see a breakout occur and just did not have any reaction. And until into today's price action, it actually have a very good rally, and we just broke above 3,000 psychological level. So based on the price action, I think we are in good hand, and I maintain my bullish view to actually to test higher target at least around 3050 based on the horizontal resistance level. And if I base it on the up channel here, then we can probably see an overbought around 3080 at this point. So let me just highlight this. So these are the possible targets. The first target that I look at, 3050 to 3080. All right, so back to the current situation. If we look at this view, like I've already zoomed out in the H1, you can see that we still bounce up very nicely within this up channel here, despite the momentum have already switched from the first up channel to the second up channel. It's kind of slowing down a bit, but it doesn't mean that we are going to have a significant correction. So at this point, my bias is still going up for this day trading, and also for swing trading. I think we are pretty much still on this upswing from here, and then we have a range, and then we just broke out from this range here, keep going up until probably we will see a test of the overbought channel at 3080, or definitely prior to the 3080 is the 3050 resistance level. And overall, the structure is very nice. This is a spring with a test, and we have a sign of strength rally up, followed by a horizontal reaction, and now we have a breakout. So the momentum should continue to the upside and test further targets. Okay, so let me just get back to what's happening now. So immediately, the resistance level that I pay attention to, I think I talk about 3050 is this level here, and further is definitely 3080 based on the channel overbought. And the immediate support level is definitely from out of this range here, 2980, where the resistance become the support level. And further down, I think we should still keep an eye on the 2910 level. This is the swing low. So this trading range is quite an important area for us to monitor. So as long as it's still above, then it still maintain my bullish view. And going forward, my bias for day trading definitely up. Possible to have a reaction when you hit the overbought channel overbought here. And for swing, we still stuck within this the uptrend channel here, but from a slightly larger time frame, I think we're still going up on this leg here. And the potential setup that I anticipate, I didn't really anticipate it will just shoot up to 3050 or 80. So what I'm looking for is actually a pullback or retrace to somewhere around 2980. If there is some kind of the bounce up from there, I will consider to initiate a long entry. Else, most likely it could just just do nothing, because it's kind of like in the middle of the nowhere. So yeah, this is pretty much for my video for today. Hope you enjoyed this, and if you find it useful and like it, just click like and also hover to my name or picture to follow me. So do subscribe to my channel so that you can get instant notification for my future videos. If you have any kind of the questions, comments, or stocks ideas you would like to share with me, feel free to comment and I will definitely reply to you. So thanks for your time, and I will talk to you soon. Bye bye.